morning. As I mentioned, I'm Anne Rossley. I'm here with my dear friend and colleague, Kyle Harvey, as well as our mortgage partner, Carol Anne Bozarth. Carol Anne is here to help us get through all the ins and outs of what's going on in the mortgage market today. Happy Monday, ladies.
Hello.
Good morning. Does it feel really early to everyone this Monday? It just feels early.
Yeah.
What happens?
It does. But what a beautiful fall weekend. Amazing.
Yeah.
And a gorgeous day today.
Absolutely right.
Yes.
So, as mentioned, we're going to talk about mortgages. We're going to start first, however, with a really quick. This is weird. I don't have a share screen option, ladies.
Maybe we have to lose one of us to share the screen.
All right. Well, let's see. Nope, that didn't do it.
Come back.
I lost Carol Anne, but then I brought her back. Well, that's all right. You know what? I was going to do it in 2 seconds anyway. Here's basically what's going on, folks. We have a few lower transactions this week than this week last year. It's what's expected given our interest rates, but we haven't fallen off all that much. Just to give you a sense, last year, this week, 4,400 properties went under contract in MRED. This week, 3,100. So a few less. Inventory, 47,000 properties of all types are on the market in the Midwest real estate data. That is about what it's been hovering at, a little bit less. Showings are down a little bit versus previous year and the year before that. That's our least lagging indicator of what's happening in the market right now. And what it says to me is we still have a good number of people out there. In fact, ladies, we were just talking about open houses this weekend, right? Mm-hmm. Kyle, what did you say that you had going on this weekend?
So I have a listing in the Gold Coast that's been sort of sleepy for open house viewing. And this week, we had 5 or 6 people come through, and they were starting their searches. So even though the markets are a little bit roiled, as we're going to hear more from Carol Anne, people are recognizing it could get worse. Let's get on it. We can't put it off any further. Let's find our next home. So I thought that was really interesting.
I had 6 through my open house at 1945 Mohawk, which is a single family in Lincoln Park. And I had people of all places in the stage. Some were starting to look, some were not thinking about buying for a year, but were out just getting educated. And then I had one come through it was a third showing. So I'm finding there's still some very good interest out there. So anyway, that's the quick rundown. All right, shall we talk about mortgages? Carol Anne Bozarth is our partner with Key Mortgage. Carol Anne, you have seen quite a change in the last few weeks.
Yes, we have. It's good times in the mortgage industry right now. It's a little bit like we're walking around with a target on our backs, right? Everybody wants to talk about what's going on. And, it's really interesting, like we have chatted before, there's a lot of headlines out there that our clients are reading and that our clients are focusing on. And, it's a big part of this as real estate agents is to help educate your clients. What do the rising rates really mean to them personally? Because it really is different. Rates, we are in a very volatile market. This is true. Interest rates on Friday on 30-year fixed for a single family were 7.5. Probably.
So is it true that rates have gone up a little bit every week for 7 straight weeks?
For 7 straight weeks, that's probably true. Yes. So we had some dips, right? We had a few dips over the summer where we saw rates come down. And rates probably, I off the top of my head, I don't know that exactly, but if you saw that somewhere, that's probably true. That sounds about right. And And again, we're not seeing major jumps. We are literally just ticking up an eighth, kind of crawling up to getting towards 8. Probably on a condo rate, which you guys see a lot. You're selling lots of condos. Remember, condo rates are always a little bit higher, usually at least an eighth higher than a single family home, just because of the layer of risk of a condo. So probably on Friday, rates for condos were probably 7.625. But taking that, when you have clients who are coming to you that were really excited about their search, and I've had this with my own clients that I was sharing this with Anne. I did some pre-approval calls with clients before I went out of the country for 10 days. And they were super excited, young couple, lived in the city, 2 kids, completely grown out of their space, couldn't wait to get out to Oak Park and start their search. And, had this conversation with them. I came back, 10 days later, and their tune had completely changed. Don't worry about getting back to us right away. Rates have really gone up. And, we can talk about, our application, there's no rush. And so, of course, I called them immediately and, educated them. We talked about, what the interest rate increase meant for them personally. And when I broke it down and I talked to them about, is now still a good time? Like, you all of a sudden didn't not outgrow your condo in the last 10 days. So when we talk about the bigger picture of, and I explained to them also about refinancing, right? You might have this rate today, but you're not always going to have to have this rate. If the rates drop, you can refinance. And a lot of young buyers, they don't understand even that process. So it's important to help our clients understand that again, I think we've even used this quote on the show: you date your rate, but you marry your home. So let's get that house that you need and want now. And if you can deal with this payment, which once I broke down, a quarter of a point in the interest rate was not significant enough for them to stop their search.
So we were talking about this earlier. If, let's say you had a $400,000 mortgage you were going to get 6 weeks ago, 8 weeks ago at 6.5%, and today at 7.5%. So you've got that 1% interest rate differential on $400,000. What does that do for a buyer in terms of monthly payment?
So that's $268 a month in the payment. If you were at 6%, 6.5% versus 7.5%. So
we're not saying that that's immaterial to some households, but if you do it for a while, you get the house that you want to be in, or the home that you want to be in. Yes, it might mean you got to cut back on some things, but it's still doable.
Right. And that's what I'm saying. Like, for everybody, it's different. So in their situation, the interest rate hadn't gone up a whole percent. So for them, we were talking about, it was like $70. So that, for me, I was like, if $70, is that going to put you out of where you were 10 days ago and you were very excited about looking for a house? And so when I broke it down, but yes, I mean, so the hard part is when you have clients who've been looking for a long time, of course, right. And the rates were, I had somebody over the weekend who has been looking for a single family house in Evanston for a while. And, the inventory up there has been really tight. And when I looked in his file, the last time that I ran numbers for him, it was 5.625.
Wow.
So he's like, how are rates now? So that's a little bit of a, that's a harder conversation. So again, having a lender that can work with your clients, making sure that your clients are actually getting the breakdown from their lenders. That's
important. Really, and we're going to talk about some of the options in a second. I want to give you another real life example. I had this fabulous property, as you guys know, at 1725 George. And when we put it on the market, we all thought it would go very quickly. So let me just kind of give you the scenario here. The open house, I had 20 people through. We knew we were priced right. We knew it was a great property. Well, what happened was that was when we had a big interest rate bump. We had 3 offers on it. No, excuse me. I had 3 people saying they were going to write offers on it. One offer came in. She went back to adjust her pre-approval and realized, holy cow, I don't like my new mortgage payment. She rescinded her offer. Then she came back with a lower offer, which we eventually, for several reasons, negotiated and got the deal done, but at a lower price than she did come in initially, because my sellers realized, given the current situation and given where they were going, it made more sense to them to sell it at that level. And I think people in a situation like this don't want to dig in their heels as sellers, and they need to be realistic about the changing market.
I'm seeing the people who are most active, at least for my clients, are the all cash. So they're deciding, I don't want to even play the interest rate game. I'm going to just put down all cash. And I don't know that interest rates are so high that you need to do all cash. I mean, if you've got the cash, wouldn't you rather have that in sort of a piggy bank, put up with this higher interest rate right now, and, pay a little, and you can always pay it off. If you've got all this cash and you don't know what to do with it, you can pay it off. But it sort of seems like an overcorrection, an overstep because of an 8% interest rate or 7.5, where we are now. We'll probably see. Right.
But I think too, what's playing into that is people are, not trusting the market, not trusting the stock market, right? So where is that? Yeah, that used to be like, why would you pay cash for real estate when you can invest? And now that the stock market is so haywire that people are feeling like real estate is maybe a little bit of a safer investment. I don't know. But I think you're right. I mean, 7.5% is definitely not the tipping point where we need to start, thinking all cash for sure.
Right. So Carol Anne, years ago when we had higher interest rates, people looked at adjustables, but they're not the answer today for most people, right? There's not as much of a differential between a 30-year fixed and say a 7-year ARM.
Yeah, unfortunately, I think a lot of real estate agents are assuming that, because that used to be the case. I've had a lot of my agent partners asking me, can they just do adjustable? Isn't that better? No, unfortunately, right now it's not. The 7-year ARM, the 10-year ARM, the pricing is just not there. It's like 1/8 lower than a 30-year fixed, so that really doesn't make sense. You might be able to find some 5-year ARMs out there at smaller, maybe local banks, maybe credit unions. But even there, those aren't going to last, because even if a small local bank has the appetite to make a few of those loans, it's going to be a few of them. So finding those are going to be a little bit like a needle in the haystack. So so
the big answer these days is buy downs.
Right.
Yeah, tell us about that.
Yes. So buy downs are back. Buy downs have actually, permanent buy downs never left us, but nobody was talking about them. So I am finding that this is a very interesting, unique way to kind of approach today's market, and really beneficial for both sides. And
tell us what a buy down is. Tell us what a buy down is.
Sure. So a buy down is just buying down the interest rate. Okay. So
by making a payment.
By a one, right. So it's the seller buying down the buyer's rate. So as a seller, why is this interesting and why is this beneficial for you to sell your house that's been listed and it's not moving? It's potentially going to help you, because if one of the problems that the listing is not selling is this interest rate market, right? So it's buyers that are like, they're just not coming in the door because they're reading headlines or they're uneducated. They don't realize it, right? So having the seller offer to buy down the rate and putting that in the listing, what does that do? That's going to possibly get you a buyer in the door that you can actually negotiate what this buy down really means. So for the seller, so let's just use for simple numbers. How this works is the seller decides how much are they willing to part with. It's very similar. It's nothing more than a seller credit, but it's a seller credit that's being used to entice people and to help people come in the door. So let's say that the seller says, I'm willing to part with $10,000, right? And let's say, for example, so $10,000 is the number that the seller comes up with. So you put in the language as the listing agent, seller willing to participate in a rate buy down, or let the seller help buy down your rate. Something very general, something very, you're not putting numbers, you're not, you and your seller have an agreement as to what that number is. So the buyer comes in the door and they have $10,000 to use to buy down their rate. So they very well may be able to, let's just use our old example. You've got on the $400,000 loan, you take that $10,000 and let's just say that will get you. Now, how much will the $10,000 get you? Depends on the day. It also depends on the profile of the buyer, what their credit score is and such. So, but we're just going to talk very general here. Let's just say that the $10,000 bought the rate down to 6.5%. That means that buyer's payment is now $268 less. If you had done a $10,000 price drop, instead of doing the buy down, the payment would have gone down $50.
Wow.
So it's an effective way to bring a buyer and a seller together. And it really makes more sense. On the seller side, they might have had to, in order to even get it to pop or get somebody in the door, drop it $20,000 in their purchase price. And then they're not even going to maybe get that purchase price, right? Because
this is much better.
You're right. It's much better. And for smaller properties, you could do, let's say the seller, it's a $250,000 condo and the seller wants to part with $6,000. Well, you're never going to do a price drop for $6,000. That doesn't even really make sense. But a $6,000, buy down for a loan size that's, $150,000, that's significant. Mm-hmm. Yeah. So it's so from a seller's perspective, it's a creative way to potentially not have to give up as much as you would in a price drop. It's a creative way to hopefully get buyers in the door. And then once you get them in the door, then you kind of start negotiating. But it's always good to have that number in mind, kind of what your seller's willing to use. And then they give that $10,000 just goes to the buyer at the closing. It's one lump sum. And whether the buyer uses it, really, that's the other ironic thing. Because it's really a closing cost credit from the seller, whether the buyer uses it for the buy down, it's kind of up to them.
Well, here's another thought too, Carol Anne. I'm guessing that when a seller offers a buy down, it doesn't change their purchase price. So all of the prorations, everything are based on that basic number.
Yeah.
That they sold for, not the credit number.
Right.
So that actually then means that you're not flipping around with the sales price and making it weird. Like if I buy a property and I get a credit, let's just use round numbers. I buy a property for $500. Mm-hmm. If I got a credit, the concession, if I got a price reduction of $490, then when I go to sell, the buyer will see that I got it for $490.
Correct.
If I get it for $500 with a $10,000 concession, they're going to see a $500,000 purchase price.
Absolutely.
Right. So when I go to sell it, they're going to see that I paid $500. Right.
Yeah. 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 Because that could
the appraisal is based on $500 then too.
Correct.
So
Correct.
your property needs to appraise out if you're going to do this. If your property is only going to appraise out at 490 and you think you're going to get the buyer to pay 500 with a 10,000 credit for buy down, that's not going to work.
Yeah, it's definitely not a game to play on the appraisal side of it, right? I mean, this is, you're still going to want your property to appraise at whatever price you have it at, for sure. Yeah.
So Carol Anne, are all lenders allowing these buy downs, or is it limited to certain lenders?
Okay, so there are two different kind of buy downs. Every single lender will do this, what we call this permanent buy down, because it really is just anybody at any time can buy down their own rate, right? So that's the other thing too, is before this market shifted, right? I mean, 6 months ago, we had multiple offers. I mean, 10 people waiting in line, it was like, so now the market has shifted, right? And so you would never, as a buyer a year ago, or, in the market that we had, think that you could ask for the seller to participate in buying down your rate. So, and as a seller, you didn't have to. I mean, you guys barely even had to do open houses, right? I mean, it was lots of properties were just flying off the shelf. So now this is being creative. And like I said, it's really nothing more than, anybody at any time could have done this even in the past. Buy downs were always there. Every lender is doing them. So, yep.
But before, it used to be that sometimes if you are offering closing cost credits, the lenders would sort of say, there was some view that you're giving money away. What you're really doing is lowering the price, and it's got to be all factored in. You had to get permission, as I understood it, to get these kinds of credits, and it had to be a certain amount.
Right. Well, there are limits, right? It's 3% for conventional. It's 3% of the purchase price. For FHA, it's 6% of the purchase price. Yeah.
So those still exist. Those limits still exist with the buy down option?
Yes.
Okay.
Yes. Yes, because it's really a seller concession.
Right. There are limits to seller concessions.
Yeah. Mm-hmm. Yeah. Now, the other thing too I did want to mention on rates is that we still have jumbo rates that are less than the conventional. So over the weekend, I was looking at jumbo rate was 7. So that's for a single family home. So that's another little thing about rates is that, it's interesting how, for a long time, jumbo rates were always higher than conventional. And so for you guys in the Gold Coast area with some of your higher priced properties, just throwing out there to remind you that any loan over $647,000 is considered a jumbo loan. And the pricing on the jumbo loans, the rates are lower. So,
interestingly, I was talking to a buyer who said that there's a product at Chase for, I guess, Chase customers called the Chase 500, and as long as you borrow at least $500,000, you get a better rate. It's like, oh, interesting.
Marketing.
So they were trying to get her to, and the price, they were trying to get her to put less down to get this rate. But of course, she could then pay the difference.
Right.
But she had to factor in PMI.
Right. Well, right.
Yeah.
And again, people don't realize this, but your rate is typically lower if you put down 15% versus 20%. The investors, they like mortgage insurance because, it insures their loan. So the rate will be down a little bit. Okay, so let's talk about for agents what's important about the pre-approval letters and how to handle in this market with the rates changing. Why vetting out the pre-approval letters is really important for both you guys as listing agents and as buyer agents. So like Anne said, in the situation on her listing, the client came back when she went back to her lender and saw what the payment was going to be. She didn't like that payment. Well, on the flip side of that is she didn't like it, but also some clients are not qualified with the higher rate. So as a listing agent, if you get an offer and the pre-approval letter is not really fresh, I mean, I'm like within a week, it used to be like, oh, if the pre-approval was dated 30 days, you're fine. So not the case right now. So please, when you're getting these offers, reach out to the lender. And what you want to ask that lender in particular is this client qualified at today's current rate?
Right.
Because even that lender, make sure they're not being lazy. Like, have they really looked at this file? Have they really put the new interest rates and made sure that this person qualifies at the higher rate? So that's really important. And then I think for your buyers, the same thing. If your buyers haven't been in touch with their lenders, rather than go and fall in love with a place and then realize you don't like the payment, like just get in front of it. I would say with all of your buyers, just check in with them. Say, hey, have you talked with your lender? Have you asked your lender what the new rates are? Let's, just be educated. And then have the conversation about buy downs with both your buyers. If the buyer's like, oh yeah, I talked to my lender, call me in the spring. You don't want to lose a client, right? And that's why it's like, get ahead of this. Sound like, obviously you guys, they're looking to you as the expert, right? You're taking them out, showing them properties. You're going to look like a star when you say, hey, listen, we're going to go in, we're going to ask for a rate. You can even, let's say the seller doesn't know anything about these rate buy downs. Their agent isn't on top of their game, but you guys are, and you can actually include this in your offer. Ask for a rate buy down from the seller.
Right.
Yeah.
Well, it brings up another point for our sellers. When we get contracts to purchase, there's a mortgage contingency clause. And in that, we used to not pay as much attention. We need to be hawks now. It says the buyer is qualified to buy a rate up to X% interest rate. And if I were writing a contract now with a buyer, I would make sure they're qualified even a quarter to a half a point higher, and putting that in my mortgage contingency clause, because it shows how qualified the buyer is to buy the property, even if rates tick up a little bit the next week before they lock.
Yeah. What about, I heard, I was at the Oak Park office meeting, and an agent who's been in the business for a long time, she said she always puts like market rate there in that section.
We're qualified for it, yes. That's much more attractive to a seller than
instead of a number
that could go bad. Yeah.
Yeah, that's kind of interesting. Yeah.
But on some level, you need that number to protect your buyer in case rates really tick up.
Well,
you sort of can't have, because then it's the same as an all cash offer, with a mortgage.
Right.
Because you're saying, I'm going to show up with financing. And the answer may be, well,
Right.
So
well,
I don't recommend that, people.
Yeah. Okay.
Unless you've got somebody who's really, really effectively all cash.
Right. Yeah. It's interesting, but yes. Yeah, so I think that the other thing too, I want to just get in, because we do hear a lot of the younger buyers complaining about, how awful these rates are. Like these are, just to them, they don't remember, weren't around for the higher rates. And so the analogy I like to use now is the 2%, 3% that they're talking about, hoping that comes back and they're not going to go buy a place until we see the threes again. That was a sale. Those rates, that 2%, 3%, that was a sale. The sale is over. And just like at Nordstrom's, you miss a sale sometimes, but it doesn't mean that you stop buying clothes. So let's keep our buyers engaged by educating them, using the buy downs on either side. It's an interesting way to bring parties together, and it's a win-win, really on both sides. And keep everybody kind of reminding them that this is still a really good time to buy. Reminding them that this rate is not, they're not stuck with this rate. If we drop back down to the fives, great. Refinance and lower your payment.
Right. So thank you, Carol Anne, for the insights on buy downs and where we are on interest rates. I would say to everybody watching, now is a more important time than ever to be in touch with your lender, to really pay attention to what's going on with rates and thinking about your options. Buy downs are an excellent opportunity, but also consider what property you're looking at. Do you want to make up for the payment with lower HOAs and maybe consider a non-doorman or walk-up building to get lower monthly payments on your HOAs to make up for the difference? And there are many other ways as well. Find a more motivated seller, for example. So
Yeah.
Anything else, ladies, before we say thanks for watching?
Thank you so much, Carol Anne. It was great information you gave our buyers and sellers.
Absolutely right.
Good.
Everybody, thanks for watching. If you have questions about your situation, please reach out to us. We will have Carol Anne's information in the comments so that you can talk to her directly. And we look forward to seeing you next week on Monday Morning Coffee with Kyle and Ann.
Bye.
Have a great day.
You too.